So I'm gonna talk a little bit about some stuff in the economy going on right now. So if that's not your cup of tea, you might not want to watch this. I mean, seems like a lot of people don't really care, or a lot of people don't understand. But it's very very dangerous what's going on right now. So people need to understand and they need to know what's going on because a lot of people a lot of people are like not worried at all about their financial future, and it's their financial future for all of us that are working is extremely precarious. Um, it's just nothing but trouble. It's stormy seas ahead. It's getting worse. It's going to be very dangerous. People are going to lose their jobs. People are not going to have any means to survive, and times are going to get really tough. And people need to understand why it's happening, and what's going on, the reasons, and what to do to protect themselves. And it's just a lot of people don't want to hear it. I don't know why. They don't want to be prepared, but. One thing is, you should never blame yourself because for this financial shit because, I mean, everybody's working pretty goddamn hard. So it's not our fault. This bullshit that's going on. I mean, these taxes are getting higher and higher. Everything is all fucked up. The economy is getting worse. I mean, in next year, the economy could crash by next year. That's how bad it is right now. It's 2019, late summer. And, I was talking to some people at work about this, and they're like, yeah, I know the stock market is, going down a lot recently, and I'm real worried. And I told her, I said, look, don't worry about the stock market. Stock market is bullshit. It's a bunch of bullshit. The stock market is just a stupid bunch of numbers. It's a bunch of bullshit. It's totally not real. It's a bunch of fake news. It's bullshit. So, the stock market is manipulated out the wazoo. It's just, there's no point in even thinking about the stock market. The stock market's going to go up and down. Who cares? It has nothing to do with anything that's the real problem. The stock market is like just a small flashing light in the distance. The real siren and the real danger flashing is in the bond market. That's what I've been trying to tell people. And a lot of people, they don't understand that. They don't know what is a bond. Well, bond is a government debt. It's a sovereign debt instrument, or it could be a corporate debt instrument. So what it is like basically, let's say you want to get money. You need more money. So you're going to issue a bunch of IOUs. You're going to say like, here I promise to pay you back in 10 years 3% of what I borrow. So if I borrow $1,000, then in 10 years you're going to get $1,000 plus 3%. Okay? So people are going to lend me money, and I'm going to issue all these IOUs. See, that's what a government bond is. That's what a bond is. That's what a bond is. And there's all different maturities of bonds. So there's a 30-year bond, there's a 10-year bond, there's a 5-year bond, there's short-term bonds, there's a couple months. And so they all have different interest rates. Okay? So the whole globe is now saturated in debt, government debt, because what the government's been doing over the past 50 years is they've just been borrowing money by issuing these IOUs, borrowing money from banks, borrowing money from investors. They're buying these bonds, and they're getting lent all this money. It's all borrowed money. And they're taking that borrowed money and they're doing pork belly spending on military, buying a bunch of government shit that nobody needs and nobody wants. So the country's infrastructures are all fucked up. Everybody's all fucked up. They've been paying all this money, and the government's just been borrowing money and having a corruption bonanza with the borrowed money that they got this gig going with the central bank. And they've borrowed so much, trillions and trillions and trillions and trillions of dollars and yen and Canadian dollars and pounds, euros. Everyone's just borrowed out the wazoo. They've borrowed ad infinitum. So the debt is exploded. And it just continues to explode. It just goes higher and higher and higher. All these governments, and the government debt is like record maximum highs. $20 trillion in the United States right now. And Trump is borrowing a record amount. Like Obama borrowed a record amount. And Bush borrowed a record amount. It's just the borrowing that they do goes up and up and up. It's all debt. So traditionally, people are gonna borrow, or they're gonna buy one of these government bonds and lend the government money. And let's say it was like, they're gonna lend them $10. Okay? Well, you get 3%. So the reason why they're gonna lend the government $3 is because then they're gonna get 30% on $3. Okay? So they get about $1 after, let's say, tomorrow. So let's say this is the 3%. So I'm gonna promise you 3%, and you're gonna lend me money, and then I'm gonna give you back more money later. That's the positive interest rate. So all these bonds have different yields, which are the interest rates. And so if the 10-year U.S. 10-year Treasury bond has a 2% interest rate, which I believe it does right now, then people are going to want to, borrow or lend the U.S. government money, and then they take that bond. Let's say it's a 5-year bond at 2%, and then after 5 years they're going to get an extra $1, 3%. So it's just, it's like, the problem is that the government couldn't pay back when the bonds matured. The government couldn't pay it back, so they just printed more money. They just printed more bonds. They just issued more bonds so they could get money to pay off the pre-existing bonds. And then they're borrowing with deficit spending, and they're just, the whole thing is like a debt bomb. They borrowed so much money, and the interest rates, if you're in a real economy, any interest rate would have to adjust to the amount of debt and the amount of credibility of the lender. Of the borrower. So if the credibility of the borrower is drowning in debt because they borrow so much and they never pay it back, they just pay the debt back by issuing more debt, the credibility should be quite low. And when the credibility of some country, some sovereign country, is low like that, the bond becomes a junk bond. Junk. That's how it is. It gets a junk rating. And junk bond ratings are very risky. But the interest rate is very high. Like 10%. Because the lender is taking a risk to lend that money. So they're going to get a higher interest rate. A higher interest rate to compensate the... Man, this cigar is just not pulling. A higher interest rate to compensate the risk. Well, now all these countries have negative interest rates. So, what does that mean? Well, that means that the lender is going to lend the government money, and the lender is going to have to pay the government so the government can borrow the money. It's like, it doesn't make any sense. It's like, normally, if I'm gonna lend you, if you ask like children, you say, would you like $1 today or $2 tomorrow? And most children are gonna say, okay, I'd like $1 today. You know, because they can't understand that if they say, well, I want $1 tomorrow, plus, you know, I can get $2 if I wait. So normal psychology is everybody wants money before, immediately. But what the government is doing now with negative interest rates is they're saying, I'll give you $0.50 tomorrow if you take $1 today. So in that case, everybody's going to take $1 today. So nobody's going to buy these bonds. Only an idiot would buy the bonds. But the interest rates are so low. Why are they so low if nobody's going to buy them? They should be skyrocketing. Because nobody wants to touch these nasty bonds. So the interest rate's going to go sky high. But they're negative. Why? They continue to be negative. Because of massive financial engineering, all these little tricks and games and gimmicks that the governments and the banks all play to keep interest rates artificially low in the bond market to negative territory. Why do they do that? Because the debt is so much, that if the interest rate rises into positive 0.01%, it would crash the economy immediately. Because the government debt is relative to the GDP of the country, you see. So the Japanese government, they have much less debt than the American government. Much less, like 5 times less debt than the American government. But the Japanese GDP is so much smaller, it's like almost zero. So it ends up being, the debt to the GDP ratio of Japan is like 400%. Or the debt to the GDP in the US is only like 150%. So it's just, all this shit is going crazy. Like, they're just printing out all of this debt. The whole system's gonna collapse. Those systems are gonna crash. All the currencies are gonna go away. Because that's the only way they can erase all this debt, is by wiping out the currency. So the currency is gonna inflate away. The beginning is gonna be massive inflation. Prices are gonna be going up everywhere. And then eventually it's gonna be hyperinflation, and then the goddamn currency is gonna go bye-bye. And we'll have some new currency. That's the future of the economic financial system over the next 5 years. Is it going to be gold? Is it going to be silver? Is it going to be Bitcoin? Is it going to be seashells, oil, renminbi? I don't know. Nobody knows. But whatever is going to happen is going to be very tough. As tough times are coming. So prepare. Get ready for it. It's not going to be easy.